So what's good, guys? Welcome back to my channel. In today's video, we will talk about daily order flow and how you can define changes in order flow. First of all, how can we define order flow? Order flow is basically how price is respecting certain PD arrays. We can divide order flow into three categories: bullish order flow, bearish order flow, and neutral order flow, also known as consolidation or accumulation. In a bullish order flow, you always want to see price to disrespect bearish PD arrays and to respect the bullish ones. And vice versa for bearish order flow, you want to see price to disrespect bullish PD arrays and to respect bearish PD arrays. In a neutral order flow, you want to see price respecting or disrespecting both the bullish and bearish PD arrays, which is typical for seek and destroy profile. Again, that's why being aware of the present order flow is so important, because again, it helps you, as in the previous video, the trading conditions, it helps you to avoid low probability trading environments. As you can see here now, I've opened up the Euro daily chart. And now let's take a look, where are we trading at the moment on the daily chart? You can see today's daily candle. By the way, we are right now in replay mode because it allows me to teach stuff more easier. I do all of those things also live every day in my Discord. So if you want to join, you can find the link in the bio or in the description below this video. But yeah, for teaching purposes, I will show you examples of order flow in replay mode. So you can see here, we have this daily bearish propulsion block. Candle retraced into bearish order block here, made a lower low. So this order block can be refined into a propulsion block. Propulsion block, we now don't want to see a close above if we are bearish. If you anticipate a reversal to happen from here, you don't want to see price to close above. If it close above, price will most likely head for the buy side of those swing highs here. As long as we close inside, we can look for potential reversal from here. Again, I told you order flow is defined by how price is respecting PD arrays, right? You can see here now, we had a bullish order flow and price was respecting bullish PD arrays and disrespected all the bearish PD arrays we had formed here in this dealing range, right? Last dealing range, the bearish one, was this swing high to swing low. And you can see price disrespected all the bearish PD arrays, this fair value gap, this fair value gap, the breaker here, and turned them into inversion levels and then trade higher into the buy side above those highs here. And now, as mentioned, if we anticipate a reversal here, we now want to see the daily order flow to turn bearish, meaning we want to see price starting to disrespect the bullish PD arrays and to respect the bearish ones, and also starting to create new bearish PD arrays on the sell side if it starts to form here. We have taken out the buy side of that high, and we're trading now a bit above the mid-level of that daily propulsion block. As mentioned, we want to see this level to hold, and now we want to see price in the coming days to trade lower. What's the first bullish PD array we can identify in that range? You can see here that's the bullish order block. It's a high probability order block. Why? Because we have taken the liquidity, the sell stops resting below that weak low, and then made a new higher high, closed above that recent down close candle. And now if you are bullish, you don't want to see price to close below, because then this would be a bearish breaker. And then we could use this level as an inversion level to look for lower prices of all the sell side built up on the way higher. Next daily candle, you can see is just consolidating or retracing. And now you can see we formed another swing high, right? So we have this dealing range, swing high to swing low. And Now let's see how price is reacting to the discount of that range, resting right at the top of that daily bullish order block. And there we go. You can see after some time of consolidation, our price displaced lower and almost closed below the daily bullish order block. This happened on Friday. So let's see how the next week opens up. On Monday, we open up with a gap to the downside. And you can see here now, we have clearly disrespected this bullish order block, close below. So now we want to use this level as a level for lower prices. And the next strong liquidity would be this swing low here. That's the most recent swing low. And it's also a weak low. So what is a weak low? A weak low is always a low that has not taken liquidity from a previous low in the present dealing range. Swing high to swing low. In that range, this low has not taken liquidity from a previous swing low. Same as this low and same as this low. That's a strong low because it has taken liquidity from that low. So meaning if price closing below this order block, that's why it's a high probability order block, because it's a strong low below, not a weak low. It even more confirms to bearish bias that price wants to trade lower into the sell side of those weak lows here. Have that high, that low, so the entire area is bearish value gap. So we have an inverse PD array, the breaker, lined up with the freshly created daily bearish value gap. So let's see what price is doing. Price just took out the swing low without giving a retracement on the daily. And now you can see the next daily candle is giving the retracement into the breaker, right? And you can see how the candle bodies are respecting the breaker. Also important to know, if you're defining order flow, you only want to look at the candle bodies. You don't want to look at the wicks. If you want, you can also turn off the candle wicks to make it look more obvious to your eye. So you can see here, let's only use the bodies now. Maybe it will be easier for some of you. So we retraced into the breaker, and that's where you now drop down to your time frame, the H4, the H1, or the M50, whatever time frame you are using. Look for continuation shorts lower. Those daily order flows bearish, and we look for price to trade into the sell side. As you can see, price is returning lower. We have this order block here, and you can see price is now trading into the daily bullish order block. And now you want to see, okay, how is price reacting to the daily bullish order block here? Is price closing below, or is it consolidating inside and then going higher again for the buy side, right? So let's see what price is doing. Also, at the same time, we have created a new bearish PD array, which is the up close candle, right? It's also a bearish order block. All up close candles in a bearish order flow should act as resistance, and vice versa for a bullish order flow. You can see here now, we are trading now at this up close candle. Let's turn on the wicks again. So we still have that low here and that low, and we're trading now at a higher time frame daily key level. We have created a new dealing range, right? Swing low, swing high. So again, you can use premium and discount, and you can see price trade into the premium of that range. So let's see what price is doing. Creates a new swing high. The day after swing high is formed usually is a continuation, especially if it formed in the direction of the higher time frame order flow. And then you can see now price expands lower and trades back again in the bullish order block. So you always have to keep that in mind. And we have the low here and this low here as our potential draw on liquidity. So you can see price almost was trading at the low and then it decided to reverse again from the bullish order block. Trades again at the low, and now you can see how price took out that low here. But it's still respecting the bullish order block. You have to be careful here now how price is reacting to the bullish order block, right? Again, what did we create? We create a new set of up-close candles. So that's the most recent up-close candle. Also, you only want to use the candles with a thick candle body compared to the wicks. For example, those candles here, where you have a consolidation profile, so a small candle body, they are not high probability candles to use for a change in order flow. So now let's see, if we get a close above here, then this would be a change in order flow on the daily. Because this candle made a new lower low, right? This low, and if price is not closing above here, the daily, we have a bullish breaker, which we can use for a run higher into this weak high here, right? Or this weak high. So let's see. And you can see here, we had a weekly open with a gap and price trade into the buy side then. So now you want to see this candle, especially the upper half, to act as support and price to then trade higher and close above this candle here. Then we can aim for this high, our next target. So you can see price retrace exactly into the middle of that breaker. Now we want to see price continue to expand higher. There we go. Price expands higher and we got close above this up close candle. So now we want to see price to retrace or expand into the high above our next target. Let's see from the top of that mitigation block, right? This candle, once we close above, turns into a mitigation block. You can see price consolidates and then expands higher, right? So now again, what can we see here? Price closed above that daily bearish value gap, meaning we now want to see price to trade higher into the high here, the buy side resting above that high. So let's see here, price makes low today at top of that inverse value gap and creates a new bullish value gap on the buy side. Next day, price opens up, takes out the buy side. Now we have to wait, is price going higher from here or if it's going again back inside the range. Now you might ask, how many candles in the past do you consider as important? I usually always use 1 to 3 months of the last price action. So I never use candles that are older than 3 months on the daily. And you can see here, 3 months back would be here, right? Around here. So this candle now is, for me, no longer of relevance. So you can ignore that one. And now I simply want to see, okay, how is price reacting to that bullish value gap here? So that's the only bullish PT area I can now identify in that range here. So again, expansion took out liquidity. So what we will most likely see is some sort of consolidation before we then either get a continuation or a retracement or reversal. double sweep, right? Initial high, first sweep, second sweep. Price closed back inside the range. We also closed below the previous day's opening price. We create a daily bearish order block here. And now let's see how price is reacting once it trades the fair value gap here. If it's going higher or if it's closing below, we can use the dealing range, swing high, swing low. We have the present dealing range here, and we can see we have this fair value gap, we have another fair value gap below. So those could be targets also if you think about external to internal. So we've taken out the external liquidity, meaning now internal liquidity is most likely. Also a weak swing low here. So let's see what price is doing. And you can see price sold off from the bottom of the order block into the fair value gap. And now I want to see how price is reacting to this fair value gap. Goes below. Now I want to see this inverse fair value gap to act as resistance and look for price trade into this lower bullish fair value gap. Let's see here, trades fair value gap. So PD area alignment, inverse fair value gap aligned with bearish fair value gap. And you can see price retraced into the EQ of the inverse fair value gap and then sold off into the daily bullish fair value gap, which is also resting in the discount of that weekly dealing range here. Now again, we'll see, okay, how is price reacting to that fair value gap? And you can see next day we get a large expansion. And you can see we close again above this fair value gap. I don't like to use those now as inversion levels because I told you you only want to use up close candle to a thick body. You can see here those have a small body. Also the fair value gaps, such small fair value gaps don't work as well as inversion levels. But most likely we will now create a new bullish fair value gap here with the next daily candle, and then we can use that PD array for a continuation higher into this high and those highs here, right? So let's see what price is doing. Next day already gives the expansion without a retracement. And we create that bullish value gap here, right? So what happens next day after expansion into key level? Consolidation, right? And we create swing low to swing high. We can define premium and discount again. And you can see that the value gap is resting right at the discount of the daily dealing range. Consolidation and then retracement into the value gap. And then you can see now expansion higher. It's the buy side. And now we are trading at present day, right? And now we have to see, okay, what is price doing now? Is price heading for the weekly buy side here, resting above that high? Or is price now again reversing and heading for the sell side, resting below this low, or even those lows? So what you want to do now is, I don't know when I will upload this video, but you can check back whenever you want. We now, again, tomorrow, if we form a daily swing high, if we make a lower high, then we have a new daily dealing range, which would be the swing low to the swing high. And we can identify this fair value gap inside. It will be crucial to see how price is reacting to that fair value gap. If we consolidate and go higher, or if price is closing below, then we can use that as inversion level to look for sells into that low here, right? And then the same thing here, close below, and look then for shorts into that low, and couple them, the inversion levels, with the freshly formed bearish PD areas that form on the sell side. And there you go. You can then frame your daily bias and also the higher time frame and daily key levels you then want to use for your intraday trades. That's it for today's video. If you learned something new, I would appreciate a like. Comment down below what you want to see next, and see you next time.